You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 5th day of October, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is our live training room. That's from 9:15 a.m. Eastern to 11:30 a.m. Eastern. That broadcast is reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the top of the page, there's a link that says 5-day free trial. Click the link and your journey begins. Now, it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. The way it works is once you complete the registration form, first thing we do is we get your desktop set up. Then we get your indicators indicating. Then the following trading day, that's when your trial actually begins. So you'll get 5 consecutive trading days, even if it stretches over a weekend. Now, when the live training room ends each day, we take a 30-minute break, and then we come back for the afternoon broadcast. That would be this one that begins at 12 noon Eastern. There are 2 different ways to join the afternoon broadcast. The best way is to go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. You only have to do that once. Going forward, what will happen is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. Now, I call that the better way because it gives you access to the question box so that you can ask questions and participate in the discussion. There will be days you're out of the office, away from the desktop, but you'd still like to join the afternoon broadcast live. You can. And there'll be days when you're just busy and can't join live, but you'd like to check it out later on. You can do that too. Of course, I'm talking about our YouTube channel, and it's really easy to remember. youtube.com/CFRN. Since you already know youtube.com, really all you have to remember is the CFRN part. Not only do we broadcast live every trading day on our YouTube channel, we also archive every daily broadcast. Currently, there's over 2,300 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. So with a word of prayer and our daily devotional. Our topic this week is faith works. And it's all based on the book of James. We talked a little bit yesterday about the history of the book of James being the first book written in the New Testament. Although when you open the New Testament, it's not the first book you see, but it was the first one written. Our scripture today is James chapter 1, verses 19 through 27, and I'll be sharing with you from the Message translation. Post this at all the intersections, dear friends. Lead with your ears, follow up with your tongue, and let anger straggle along in the rear. God's righteousness doesn't grow from human anger. So throw all spoiled virtue and cancerous evil in the garbage. In simple humility, let our gardener, God, landscape you with the word, making a salvation garden of your life. Don't fool yourself into thinking that you are a listener when you are anything but. Letting the word go in one ear and out the other. Instead, act on what you hear. Those who hear and don't act are like those who glance in the mirror, walk away, and 2 minutes later have no idea who they are or what they look like. But whoever catches a glimpse of the revealed counsel of God, the free life, even out of the corner of his eye, and sticks with it, is no distracted scatterbrain, but a man or woman of action. That person will find delight and affirmation in the action. Anyone who sets himself up as religious by talking a good game is self-deceived. This kind of religion is hot air and only hot air. Real religion, the kind that passes muster before God the Father, is this: reach out to the homeless and loveless in their plight and guard against corruption from the godless world. Again, that was James chapter 1, verses 19 through 27. True belief causes Christians to live out their faith according to God's word. We don't passively hear the word. Rather, action should always follow genuine heart change. The one who merely hears the word and has a lifestyle that is characteristically against doing what he hears has not truly received the gospel. Many scholars have called the book of James a commentary on Jesus' Sermon on the Mount. They mean Jesus uses similar language and images to describe a life of true faith. The Sermon on the Mount concludes with a famous parable about building a house. This is the heart of James' letter: hearing and doing. Faith expressed in our works. Now, works does not lead to salvation, but once you have salvation, works will come. James left no room in his letter for the idea of hearing the truth and not doing what it says. He didn't want his readers to deceive themselves into thinking they could be Christians merely by believing the right things about Jesus. Following Jesus requires action. In today's society, we've reduced the word faith to a noun. Like, what faith are you? When, if you study the original language, it's a verb. Jesus was always doing something. Even when he went off by himself away from the crowds, he was doing something. He was praying to the Father. As a disciple, you not only have to believe that Christ is worth following, but you also have to take steps of faith to deny yourself, pick up your cross, and follow him daily. Being a doer has two components: putting away filthiness and seeking pure religion. If the word religion gets you bent out of shape, set aside your personal interpretation of what that means. James was talking about a devoted life that's pleasing to God. And that word religion, if you do word study, actually means a return to bondage. That's not what James was talking about when he used the word religion. He was talking about a life that honors Christ. Join me in a word of prayer. Heavenly Father, as we come before you today, we're thankful for the wisdom and guidance that we find in the book of James. Your word calls us to be not only hearers of the word, but also doers. Lord, help us to be quick to listen and slow to speak. In a world filled with noise and distractions, grant us the discipline to listen attentively to your voice through your word and through your Spirit's prompting in our hearts. Teach us, Lord, to be slow to anger, for we know that human anger does not produce the righteousness you desire. May our emotions be under your control, and may we respond with patience and grace in all situations. As we hear your word, help us to apply it to our lives. May we not deceive ourselves by merely listening to your teachings, but failing to put them into practice. Lord, may our religion be pure and undefiled before you, as James encourages. May we care for the widow and the orphan, the vulnerable and the oppressed, living out our faith in practical ways that make a difference in the lives of others. May our hearts always be receptive to your word, which has the power to save and transform us. Keep us from self-deception and hypocrisy, and lead us into a deeper relationship with you. Lord, we pray for the strength to live out our faith authentically, with hearts filled with love and compassion. May our actions and our words reflect the truth and grace found only in Jesus. It's in Jesus' name we believe and pray. And everybody said, amen. Well, happy Thursday. Hope it's a happy Thursday for you, wherever you are and wherever you are. Reminder, tonight is our members only workshop, 8 p.m. Eastern. So if you've been on the free trial and you've made your decision to become a part of our family, simply go here to eminifuturestrading.com. Couple mouse clicks and you become passport holder. That's lifetime membership with no recurring fees, no upsells, no nonsense, ever. Remember, 9 out of 10 new traders fail because they have no one to teach them how to do the job. If you want a shot at becoming the 1 out of 10, trust me, you need somebody to teach you how to do the job. As a passport holder, you not only have lifetime access to the live training room every trading day, but you also have unlimited access to one-on-one private mentoring, the strategy that we teach you, the indicators that you own for life as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. Support, resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. And as a passport holder, you'll also receive the Logic 247 alerts, concierge trade alerts, and you will have access to the members only workshop every Thursday night at 8 p.m. Eastern. Again, eminifuturestrading.com. If you have questions, you can call 949-42-EMINI or just send an email to support@cfrn.net. All right, let's go with those numbers from around the world. Start in the U.S. with the cash markets, or the indices as they're called. The Dow is down 134 points. The NASDAQ is down 76. The S&P 500 is down 23. And the Russell 2000, our man in the street, is down 10. Guess the rest of the pack was following the Russell from this time yesterday. There were some ups and downs along the way. In the commodity basket, crude oil down $1.54, trading 82.68 last. That's a drop of almost 2%. Now, if you turn on the TV or the radio, any financial station, or if you read blogs, everybody's talking about how crude is headed for $150 a barrel. Anytime all the talking heads start agreeing on one specific thing, you can almost always expect the opposite to happen. Crude is a beautiful example. I'm not saying crude won't eventually go to 150. I think from a fundamental perspective, it's inevitable. But again, we're down 2% on the day. Gold is down $4.20, trading 18.30.60 last. Silver down 17 cents, trading 20.97 last. That's a drop of almost 1% for silver. In the Asian markets at the close, the Nikkei posted a gain of 548 points, almost 2%. The Shanghai gained 3 points. That's 3 days in a row. The Hang Seng gained 18. And in the European markets at the close, FTSE up 39, the DAX down 29, the CAC up 1.5. So that gave us a green day in Asia. It was a mixed day in the UK. And so far, it is a red Radio Thursday here in the US of A. So, with that, let's take a look at Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, though. It's also crude and gold and silver and the euro and bonds. It's been a quiet week. We're in week 270. Now, over the last 270 weeks, we've issued over 15,100 individual handcrafted alerts. I think we're approaching 15,200. And we've averaged 20% or less of the alerts being stopped out on a weekly basis based on a very simple risk profile that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. This recap was done at 7 a.m. Eastern this morning, so Valerie will update it this afternoon and this evening. As of 7 a.m. Eastern, we had 22 alerts issued, 3 that never triggered, still waiting on 3. That gave us 16 actionable alerts, of which 3 or 19% would have been stopped out based on that risk profile we teach all of our passport holders. Now, the logic alerts are based on current price action. They can come out at 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. So our day session is their night session and vice versa. Now, on the logic alerts, there'll typically be multiple targets because I have already looked left to see where potential obstacles are. That would be previous swing highs or swing lows, which can become current support or resistance. With the concierge trade alerts, that's our original alert service, you get to look left yourself. You see, the purpose of the alerts, both logic and the CTAs, are a training tool to help you become self-sufficient. If your goal is to someday trade for a living, then you certainly can't be waiting on someone else to tell you when to get in and when to get out. When the logic alerts are posted, when one comes out, there's time built in for you to get the alert, study your 30-minute chart, see the window of opportunity that the alert represents, and then be prepared to take action when price reaches the entry point using everything you learn every trading day in the live training room. You can use a 7-tick range, an 8-tick range, a 10-tick range. Probably following along with exactly what Michael does. He's teaching you the mechanical model. You need to grasp the mechanical model before you can even start to think about discretionary trading in larger time frames, etc. Now, the concierge trade alerts, on the other hand, are based on historic price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. Unlike the logic alerts, which can come out anytime around the clock, the CTAs are published shortly after the Globex Open, Sunday night through Thursday night. We're in the Thursday session, obviously, but you've got to remember the Thursday session began last night, Wednesday night, at 6 p.m. Eastern. So my goal is always to get this report published as soon as I can after the Globex Open. So I did pretty good last night, got them out at 6:10. The night before was 6:15. 610. Probably the average is around 630. Okay. Now, what do you do with these? Well, number one, only worry about the markets that you actually trade. When this report gets published, go to the 30-minute chart of the market or markets that you trade and make note of where price is at this time. Then draw a line in the sand at the long target, a line in the sand at the short target. These will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. But again, with the CTAs, this is your next step. You're learning to look left yourself to spot potential obstacles. Previous swing highs, swing lows can become current resistance or support. And you'll learn over time how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern, if price is above the 30-minute BBC, it's trying to get to the zone overhead. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern for our members and even our trial members. And once they're posted Monday morning, they are carved in stone for the entire week. They don't change in any way whatsoever. Only one of three things will happen at a weekly zone. The most common is consolidation, about 70% of the time. The second most likely is rejection. It's about 20% of the time. And the slice, that's where price just slices through a weekly zone like it's not even there, about 10% of the time. When that happens and the slice runs out of steam, it will quite often retrace back to the zone it sliced through and then continue in the direction of the slice. Now, since this broadcast is open to the public, that's everybody everywhere on planet Earth with an internet-connected device. If you're not a member or trial member, you did not get these numbers last night. So if you want to grab a screenshot, you can. And if you're watching this after the fact on our YouTube channel, you can simply hit pause, jot down the numbers that are relevant to you based on the markets you trade, and then hit play. So with that said, let's go to where we always start, the daily chart. Why the daily chart? Well, I'll tell you. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. Most institutions have accounts in the hundreds of millions, billions, even trillions of dollars in a few cases. But it's when the institutional traders trade, price actually moves. So our strategy and our indicators aren't designed to outsmart the institutions with all of their resources or beat the market, whatever that means. Our strategy and our indicators are designed to help you see and understand what the market is doing. What's the objective? What's the reason? And then you simply do the same thing that the market's doing long enough to get your goal for the day, and then exercise the self-discipline to put the mouse away. Of course, we're still talking about our big head and shoulders pattern. It's a big one. I don't remember the last time we had one like this. It's because we spent most of a year in an uptrend. We've come down from the top of the head to the neckline. Once price breaks the neckline, and you move your little measuring stick like this, and that tells you where price should end up. Now, there's nothing proprietary about that. It's technical analysis 101. Any trading book that you read that has to do with patterns, and we're really not pattern recognition people. We just trade what's in front of us based on our indicators. But that's what a measured move's all about. But what makes this particular measured move so interesting is over here we have a bullish cross that led to a very extended move. When that happens, the first time price revisits the area of the bullish cross, it will almost always be good support, at least the first time down. Same is true of a bearish cross in the opposite direction. Now, we've been at the 50 for 1, 2, 3, 4, 5, 6, 7, basically 8 days. Yesterday, we reached down as if we were headed to the 62, but this previous support area kicked us back up to the 50. Now, last night in the discussion group, I discussed the potential for price to get above the step line and then to look left to see where obstacles were, because price always reverts to the mean. And I said earlier in the week, if we consolidate for a few days at the 50, that's going to bring the BBC down. That's the green line. Just stands for bull bear cross. When price crosses above the green line, that's bullish. We anticipate higher prices. When price crosses below that green line, bearish, we anticipate lower prices. Price always reverts to the mean. In other words, price will always pull back to the BBC. Price rarely travels in a straight line. Leg, retrace, leg, retrace, leg, retrace, leg, retrace. A leg and a retracement, a leg and a retracement, until no one's willing to pay one tick more, and then price will head in the other direction. Came down. Now the pullback holds more often than not, but we know that eventually, when we hit that point where no one's willing to pay more, there's a high probability price will trade through the BBC and start creating legs in the opposite direction, as it did here. Leg, retracement, leg, retracement, leg, retracement, leg, and then this retracement traded through. We were waiting to see if we would break this trend line, which we did not. Two opportunities to do it. This opportunity came on a bounce off the 24% fib retracement, and look at how many times we bounced off of it. First time we traded through it, we got a little bit of a bounce, but not a lot. And that took us down almost to the 38, where we put in a nice doji, gave us a leg and a retracement, and then we traded up through the BBC. We completed the right shoulder, this time down, We traded through the 38. Then look what happened the following day. Price came back. We sliced through it, come back to test it, and that took us down over a period of days to the 50, where we got a bounce. Now we're back below the 50. So the question at this point is, will we see the 62 before we touch the BBC? Now, legs vary in length, as you can see, but just know that price is always going to try to revert to the mean, in this case, BBC. So where we close today will be really important. Right now, price is trapped between the 50% fib, the daily step line, and red and falling. Red and falling acting as support, step line acting as resistance. If we were to close the day back above the 50, then we would probably make a pretty quick run up to the 38 and the BBC, which would then launch another leg to the downside. Once we get to this area, the 62% fib, where there was all this turbulence. Now, this wasn't the 62 when all this turbulence happened. This didn't become the 62% fib until this high was put in. And we're measuring that from the low of March 13th to the high July 27th. The really true low goes all the way back to October 13th of last year. But we've rolled over a number of times, so we've had to kind of adjust things. And that's the most important swing low up to this high. And both the measured move and that previous bullish cross tells us eventually this is where we should end up. But for now, just focus on what's in front of you. Okay? All right, on the ES, all alerts, both logic and concierge, are based on the 30-minute chart. The vertical line separates today, Thursday, from Wednesday. Here's Tuesday. This is where we opened last night at 6 p.m. Eastern. This is the beginning of the Thursday session. We're above the BBC, and we had blue and climbing directly overhead, which can be resistance. But price managed to break through once blue and climbing is directly above price. You can see it made an attempt and failed, and then it finally got above it, but it never quite made it all the way to the long target. It did provide enough area to get your goal for the day. Then, even though the pullback holds more often than not, on this one, we didn't. Traded through it, we pulled back to the BBC, and then we dropped to the weekly trading zone at 4279/80. Now remember, these are the zones that were published Monday morning for our members at 6:15 a.m. Eastern. We've come through that zone, we've hit the short target, we bounced back up to the zone. Now we're printing a red candle. We're coming through the step line, or through red and falling. The step line could be potential support. Then we would be at the target again. And then this low, the low of today's session, based off this low from yesterday afternoon. So when price rises to a zone, we expect resistance. When price drops to a zone, we expect support. 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 Okay? Now, that's the same with every market. The Dow has basically gone sideways the whole session. We did open above the BBC, and so price went up to the weekly zone, pulled back to the BBC, got below it, but that was short-lived. Buyers came in. When you see this kind of trading, where price is below the BBC, then above, then below, then above, then below, that's a market looking for direction. Looks like we might have found our direction. We just have to get below the step line. That should then take us to the low of the session, and then this low, and then this low. Then we've got one more weekly zone down below. On the Russell, here's where we opened last night. Pull back to the BBC, the pullback held, and off we go. Right to the target, pretty much to the tick. 1746. Then we got below the BBC and we attempted to get down to the short target, but we ran into this support created yesterday afternoon. That sent us back above a retracement. We hit the long target again, and we get below the BBC. We hit the short target. When the market finds support, it's going to go look for resistance. When it finds resistance, it's going to go look for support. 1725/26 is the lowest weekly zone this week for the Russell. We traded a little bit below it yesterday, but now here today we're back above it. By close of business Friday, we expect price to be at or above the lowest weekly trading zone across all the markets. But you gotta embrace all possibilities. On the NQ, here's where we opened last night. We made a run right up to the target and the weekly zone. Again, these are the zones that were published Monday morning. We get a pullback, a failed attempt to get to the zone below, go back up to test that zone overhead, and we get back below the BBC. Then we slice through this zone on the 30-minute chart and then pull back to the zone we sliced through, continue in the direction of the slice. Market has found support, and it's now failing to pull back all the way to the BBC. So I would let price get, about 755. Trade it down, target for the low of the session. Crude is below the lowest weekly zone. We dipped below it yesterday, got back above it, but the BBC, the pullback held. That sent us down to the target. We've now put in sort of a double bottom here. Pulled back up to the zone. See how we sliced through that zone? Then pulled right back up to it. Continued in the direction of the slice. So crude has been a difficult market so far today. We're below the BBC. Blue and climbing has turned to red and falling, but you're printing a green candle. So you've got two bearish things going on, but you've got a bullish thing going on. You're printing a green candle. So you need to wait for price to get down to about 82.85. Trade it down to 82.55. That would be $300 per contract traded. Michael should be here in a second to give us a recap of the live training room this morning. Then we'll trade live for 30 minutes on the TradingView platform. On gold, here's where we opened last night. From the BBC, we ran right up to the long target and the weekly zone. That sent us below the BBC, and we got a leg and a retracement and a leg that took us to the target. Another pullback to the BBC that held. That sent us back down again to the target and below. We've got one more weekly zone below us down at 1791/92. Silver, here's where we open. We made a run up to the target, hit the zone, Remember, when price rallies up to a zone, we expect resistance. Now, we got one more zone below. It's way down here at 1920/21. Price is consolidating at the short target, so we look for a pullback to the BBC, then another leg to the downside. And on the euro, price pulled up to the zone, consolidated. That's what will happen 70% of the time. This is a rejection right here. And we've managed to work our way all the way up to the long target. We're above the BBC, so that's bullish. We anticipate higher prices, but we have to respect the fact that currently we're printing a 30-minute red candle. You've got to wait until you're printing a green candle and you're above the BBC before you start thinking about using your smaller time frame to actually go long the market. And that takes us all the way around the world. Price still trying to get through red and falling on the daily. So with that said, let's see if we can go find Michael. There he is.
Here I am. I am here.
I see we both. I forgot to change my name as well.
Okay, I'll do mine right now, so it'll be you'll know which one you are. There. Okay, mine is done. And
okay,
now I'll bring the charts over. And here it is. We'll do that and scroll down just a little bit more on this and say upcoming streams and click on that and refresh that and shut that off and shut that on. Shut it on. That's what I'm going to do. All right. There we go. Ready to roll.
It looks good.
All right. Good afternoon, everyone. Today is Thursday. Partners meeting tonight, 8 p.m. Today is Thursday, the 5th day of October, 2023. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says start your free 5-day training now, 9:15 to 11:30. I corrected that, 9:15 to 11:30. All right, because we are starting up at 9:15 in the morning now. So click on that, and you'll be brought to this page where all you have to do is fill out this form. We got to update all these things in here, but all right, here, beginning of 2023, we'll start at 9:15. There you go. Okay, so it is up there. Anyway, fill out this form, and we'll have to change all this too. But fill out the form, and that's it. There's no credit card required or anything like that. If you're using TradingView, give us your TradingView name. If you're using NinjaTrader, give us your machine ID, and we'll get everything set up for you easily and quickly. All right. If you're having issues, or if you have a trading platform that I did not just list, you can come in here. DT Pro is what I trade on, actually. I don't chart on it so much anymore, but I do trade on it now. TradingView platform is what I use for the charts all the time. And we also do NinjaTrader. We have NinjaTrader running there in the background, and you can choose NinjaTrader as well if you want to. The spreadsheet. Let's go back to the home page on this. I'll go to the spreadsheet now. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures at the bottom. Today is the 5th day of October, 2023. Today we stopped out on our last trade of the day. It was an NQ trade, and we stopped out, put us to -6 on that. We're +4 on the Russell, +20 on crude, and -10 on the ES. So we ended up only +$65. That doesn't seem right. This is -125. That's +200, and that's +20, and that's -30. So that is -155 plus 220. I guess that's right. It makes sense. So we ended up with just +65. We did get our goal for the day after 36 minutes this morning. The markets were kind of tough this morning starting out. Normally they start out a lot easier than today, but I did have 3 stop outs that I had to make up for, and so we did. And it took 15 trades, and at that point we're up $1,000. It took us 20. We took a total of 27 trades this morning. All right. So on the month now, we're up $2,070. That's over 4 days, averaging $517 per contract per morning session. On the year, we've got our goal 155 out of 189 days. 185 out of 189 days. 185 out of 189 days. Gosh, that would mean I had 30 days that I didn't get the goal. Unbelievable. Anyway, 185 out of 189. And so that puts us at $83,364 on the morning session, okay, with just one contract, averaging $450 per day. Now, this is where you really want to be, consistently profitable and getting your goal every day, right? If you get your goal for the day and you quit when you get your goal for the day and you add one contract a month, so far this year, you'd only had to work 59.5 hours and you would have averaged $2,355 per hour for those 59.5 hours, right? So this extra 15 minutes every day is starting to add up. It really is. Anyway, it is what it is. And let's get into the actual trades. Okay, I believe we traded a little bit on everything today. We did. I don't know why that says, oh, that says ES. Oh, I see what I did. I called it crude. Oh, it is crude. I was thinking gold. I don't know why. Right. Anyway, on crude today, we took a few trades. You see all these black arrows that were in there. We didn't take any of those. We did take some of these though. Our first trade of the morning was right here on crude. Today we picked up 7 ticks on that first one. We missed that. Grabbed 2 there to get us to 9, and 1 there to get us to 10, and then 10 there to get us to 20. That was just a ribbon trade right in here. I think it was actually meant to be this one right there. And 10 there to get us to 20. It was just a ribbon trade. You see how the black line is in the green? It did not come out of the oversold, so that's why we didn't get an arrow. You just had to rely on the ribbon on that one. Right, so the black arrows just kept going up and giving more trades. It was a green arrow trade in here. That would have been a break even had we taken it. I wouldn't have taken that going into the zone. And we changed directions in here. I was looking for the green arrow and we never got it. I was actually training during all this period right here. So I missed all those no trade zones for the most part. And you had a black arrow here. Now that one had to put in a lower swing, so you wouldn't have looked at these really. You would have gone from that one to this one to this one to these. And all of those worked out. This one also worked out. And this one worked out. It didn't put in a lower swing, but it did work out. This would have been your first stop out right here. But all that happened during the break, right? So you can see there were some nice opportunities there with crude oil during the break using the black arrows. Not so much the green arrows today. Yesterday, the green arrows provided some really good opportunity. Today, not as much. More black arrow day today. Okay. And that was just the way that it was. It was tough all day. Today, this morning, let me show you that one more time. One of the things I said this morning when we started up is we were way down here when we first opened the room up in the pre-market. We were down here. And I said by the end of the day today or tomorrow, it's going to be above this weekly trading zone because I had recognized that that was the lowest weekly trading zone I had realized. And I said by the end of the day today or tomorrow, we're going to be up to that zone and probably above it. And we got up to it, stopped at it, and got rejected by it, right back down to where we were. So if you're looking at this in the bigger picture, if we crunch this all up and look at it like this is kind of an ugly pattern that it's in right here, where you have higher highs and low lows. So it's going to be muddling around here in the middle until it chooses a direction. And my guess is that it's going to end up going up. You know, the pattern itself is called a bugle, where you have higher highs like that, lower lows like that. And when you're in the middle of something like that, it's kind of messy. Now, there's a huge space in here for us to trade, so it doesn't matter so much to us. But if you were trading it like on a much larger time frame, then that's something you would have to consider. Right? On the Russell, I only have 5 minutes left. Let's go quickly here. On the Russell, we had a bunch of trades on the Russell today. Okay, let me scroll back. We had that was a +5 and a -10. All the way back to the beginning. Okay, now it started out, the day was a whole bunch of break-even trades. I got this one with a break-even. I got this with a break-even. Then I had a little bit of a gain here. I had a 5 and then a 4. So we're at +9, then another break-even. Then scroll all the way over here. Went from 9 to 14, so I had a +5. And then I stopped up, -10, put me at +4. Okay, and that was all we did with the Russell today. Not a lot happened here during the break. There's a short trade that just triggered here a few minutes ago. Green arrow, that would have been a break even. That would have been a stop out if we had done that. Okay. And now we get into the ES. We had some trades on the ES today too. 56. All right, here we go. First trade here on the ES was a stop out, -10. Then we had a break even on this one and a break even on that one. And a whole lot of no trade zone in here. Since then, we had one green arrow here that would have given us the 10 ticks to get back to break even, one green arrow here that would have been a break even trade. So today, there was just not a lot of opportunity. And it's kind of weird because, the first week of the month is usually when we get the majority of the news events. And today, we really didn't have any. Tomorrow, 8:30 a.m., we have big news coming out. So you want to be careful trading tomorrow at 8:30 a.m. All right, the NQ. Now, again, we had the majority of the trades on the NQ this morning just because it's so volatile and it moves around a lot. Okay, so here we go. Here we go. All right, our first trade in here was a break even. Then right here we had a stop out on the NQ, -20. And a break even, another break even. Now all these break even trades ended up being really nice trades. Sad that I ended up with a break even on them. But here we picked up 12 ticks to get to -8. And then we had a break even and another stop out to put us to -28. We still haven't gotten the goal for the day at that point. I was in here that we ended up getting the goal. And we went from -28 to -8, so I had a +2 there, and then I had a +30 there. I had a +20 there and a +30 there. I believe that's where we got the goal. I'm pretty sure. Right there. And then we stopped out again right after that. So we were up to +22, then we stopped out, and that put us at +2. Then we had another break even, and we had a profitable trade there, got us to 14. And then our final trade of the morning on the NQ, we had a break even and a break even. And I was skipping all of that, waiting for the one green arrow that was going to have some trend to it right over here. And I took it and it stopped me out. That was my final trade of the morning at 11:25. That put me at -6 on the morning on the NQ. Okay, during the break, it just wasn't really having any follow through today. Did get back up above the zone, but see all these green arrows that just don't have any follow through. You get 3 in a row that didn't put in a higher swing. You'd only take the first one, it would have been a break even. You wouldn't take any of the other ones. But so if you look at the long-term trend, it's just not having any follow through today. I think everything's waiting for tomorrow. That kind of stinks because right now I'm going to start the live stream, and we'll probably not have a whole bunch going on in the live stream today. I mean, yesterday, it was right at the end we had all that stuff happen, and I had to leave. And then it turns out I could have stayed another 5 or 10 minutes. I didn't know that until I was already on the road, but frustrating. Anyway, I'm going to start the live stream. So if you have not taken a free trial with us, go to the homepage at mytradingiq.com and sign up for the free trial right there. Okay. Our results on the morning again today, we were -6 on the NQ, +4 on the Russell, -10 on the ES, and +20 on crude oil. The markets have been, well, flat today, not a lot of follow through. It's definitely one of those days where you want to quit when you get your goal for the day. And today, even that was tough. Getting the goal for the day was tough today too. But we did do it, but it still shouldn't have been as difficult as it was. I'm going to bring up my question box, and I don't see anything in the question box, and I have to remember to do that right now before I forget. Yes, so right now on the NQ, we've been flat here for a little bit. All right, I want to see the long-term direction spread out a little bit. Okay, I want to see that spread out so I have something to work with. It's starting to spread out a little bit here. I'm looking for a green arrow, but I want to see it spread out. We've already gotten green arrow, so I could take a black arrow, but we're not going to get any arrow until the black line here gets into the over. Okay. And that is be no black arrow until there'll be no arrow until the black line gets into the oversold. No arrow whatsoever. Over here on the Russell right now, we're at the ribbon. We did have a lower swing here, push down. So there's a potential trade there. There's a potential trade over here on, not on the ES. We didn't get a lower swing on the ES, but there's a potential trade on the crude and a potential trade there on the Russell. Okay, so the Russell right now, it's got a high here of 33 points. So you would be looking for something 8 ticks below that at 32.4. 33.2 minus 8 ticks will give you 32.4. If it comes out of the overbought like that, then you have a trade right here like this. Okay, now the stop should be 10 ticks away like that. And it looks like it's going to try to get down to 31.20. 31.20. Let me start this. After 4 ticks in profit, the stop goes to break even. Okay, one more. One more. There it goes. Stop to break even. Now 31.20 is what I was saying, right? I like that. We'll go for that. That'd be 10 ticks if it gets it. Gonna lock in 2. So we're gonna get 2 or 10 on this. Okay, 2 or 10. 31.20 is what I liked, and I think it's gonna go through that. It is 10 ticks on the first trade. And that, my friends, with the NQ, I mean not with the NQ, with the Russell, also with the NQ, but that 10 ticks is with 10 contracts on is $500. Okay, in case you don't know that. The ES also gave a trade over here. I didn't do the ES trade, but the ES also gave the same trade. The NQ tried to give this. This is why I was saying I didn't like this, because it had the wrong direction. It's just kind of flat. We did put in just a little bit lower swing right here. Now the thing to look at, and this was in yesterday's lesson plan, the thing to look at here is these leg lengths. Okay, this right here. Oh, come on, man. There we go. This right there is your leg length. Okay, that's the thing to look at. So the leg lengths, that's what you should get. Now it'd be good if it exceeded that. The pullback, this pullback was a little deeper than that pullback, so it'd be good if we exceeded on the leg length right here. I don't know if we're going to, but it'd be good if it did. But that was our first trade, plus 10 ticks. Let me jump out to the live stream for a second and see if anybody out there has any questions. I don't see it there. And where the heck is the live stream? Okay, here it is. Okay, nothing over there. All right. So if anybody's watching the live stream and you have any questions, you want to see anything other than futures, just type in what you want to see. Okay, and I'll jump over to what you want to see. This also. That is for Jill. Think about it. Who's in here today? Stephen S. That was. On the crude, we have a lower swing in here. We need to pull back up and give us an opportunity to short. On the Russell, we did get down to the leg length and we exceeded just a tiny bit. On the ES, we also exceeded the swing low just a little bit, right? So we've gone and established a trend in a couple of places. What that is. Huh. Right. Hide that. Hit save on that. All right. So now we got our lower swing here. We have our lower swing here. We have our lower swing here. We're going through the weekly trading zone on the NQ, and we have a lower swing. So now I'm looking for short trades everywhere across all 4 of these markets right now. We need pullbacks and short trades. Okay. And we'll be able to jump on all that as soon as we get them. Here, here, and here, and here. Okay. minimize all this stuff so I can get to the meeting. All right, so we're starting to get a pullback here. We'll pull back over here on the crude. We're in the overbought on the crude. So now if we drop out of the overbought, we're going to have a black arrow on the crude oil, right? So that would be a potential trade over there if we drop out of the overbought with a black arrow. Okay. Back in the live stream, we don't have anybody asking any questions in there right now. So we will just have to wait and see over there. Yeah, so crude oil's, not the crude oil. Well, the crude oil did pull back. All right. Now we're even further back on the crude. So the high of this bar is 74. So on crude, we'd be selling 66 right now. All right. This selling 66. Now, because we didn't hit the ribbon, this has to pull out of the overbought to be a valid trade. It'd give us a black arrow here if we do that. All right. And it did give the black arrow, it did drop out, and it didn't fail me, so I'm going to go in right there, okay? And did I do the math wrong on that? I must have done the math wrong on that. Anyway, stop is in there at 10 ticks, and it's looking like it should get down to 82.56. 82.56 is where it should go down to. All right, I'll draw that in, and then we'll see if we get there. 82.56 right there is the spot. It's looking like to me. It should go through that. It should go down and put in a lower swing. Below 52 is what it should do, right? We need 4 ticks in profit to bump that. Stop to break even. Stop to break even. I don't know why that happened, but stop to break even. And now I'm going to lock in just 1 tick, and I'm looking for a new target. There it is, right down there. New target right down there. We'll go for 82.48. Now let's see if that makes sense. Okay, given what I just said a few minutes ago, using the leg lengths. This is actually 2 different leg lengths right here, okay? If we start with the first one right here, this is what your leg length is looking like, right? Something like that one right there. And then it repeated itself right here. It extended it a little bit. So over here, you'd pretty much expect the same thing, and that would bring it down to the swing low. It just took us out. Let me cancel on it. It just took us out with the break-even trade, I think. Yeah, I think that was actually break even, right? Maybe it was a +2. I don't remember. But this is where it should go down, at least down here to the swing low, right? The leg length equals the swing low in this case. So I know we're out of the trade right now. We're not going to be able to get back in it. That's what it should do. Now, what I was saying a minute ago, if you waited for the green arrow, you didn't take the black arrow, and you waited for the green arrow, you can take this green arrow, right? I can't because I took this one. And when you commit to a trade, it's got to put in a lower swing. Right, I committed to the trade on the black arrow. I didn't wait for the green arrow. The green arrow should do it, though. We should get down here right now. This is what it should do. Now, on the NQ, we have a black arrow right here, but because we had a direction change, I like the first arrow, the first pullback to be a green one. Right, the ES is still going down. Let's look at the ES and see where that should be going to. We have the midpoint way down here, way down here. So let's look at it on, I want to look at it on the bigger picture, but I'm not exactly sure what my bigger picture is doing right now. Let's try. Yes, 30 minute. Okay, so this is the woo spot that I mentioned earlier that we started to get into. I was talking about this candle right here. If it closed in the woo spot, then we'd have a woo spot down to here. We never closed in it. We went right back up to the BBC. When I was talking in the room this morning, doing the weekly trading zone analysis this morning, if we would have gotten in there, we should have gone down to the midpoint, and then it bounced back up toward the BBC, but we didn't get in there. We just bounced right back up to the BBC. And you see right here, the black step line is just about to cross into the MA1. That usually indicates that it's going to go up to the BBC, but it's already gone to the BBC, so it might not actually do that. If this bar ends up closing down, if you finish this half-hour period down below the black step line here, I think we're going to see it get all the way back down to here, which is a midpoint between the 2 weekly trading zones. That's what I was saying this morning. We did get a pullback, and what I was saying this morning is any pullback on the ES is probably going to be short-lived. And if we look at, we almost have another trade here on the Russell. We do have another trade here. Well, we have one coming up here on the NQ also. The NQ looks like it's going right back up to its weekly trading zone. It's got to have a down close on this bar to give it a trade. good. Urgent care. All right, I see it. I see it. I will jump right on it. I will jump right on that. The crude oil is pushing down now. The NQ is also going to trade. I'm going to jump on the NVIDIA thing here in just a second. We have a crude traded right now that we're taking, and that should go all the way down to the prior swing low. So it should give us a full 30 ticks, right? My stop is at break even. I'll keep you updated. The ES doesn't have a trade over here on the Russell. It is in the overbought right here. So there's a chance that that is going to give us a trade there too. Now, the NVIDIA, let me bring up a fifth level here. We just got to break even on the NQ. The crude oil, though, just got down to that first level that I mentioned, and it should go down, finish the swing low right here, and probably go through it. So look at NVIDIA on this chart. This has got a lot of stuff on it, and it looks kind of weird. I don't know why. Let's just do NVDA. Now, let's do all on that. When you're talking about NVIDIA, what and all those stocks that you just mentioned, yeah, scalping. Okay, all right. So we'll look at it on a smaller time frame. This is 100 range right here. Okay, so every bar is $1, but it's a $400 stock, so that's not too bad. In here, you'd have to set the TIQ context to, I don't know. It's let me just check this to make sure it's even turned on. And my chart just hung up. Hold it. Okay. Put that on. There we go. All right. That one seems to be more suitable for what we're looking at here. It's got 0.1. We don't have any weekly trading zones for the equities, but it does have the no trade zone on in the Arizona. All right. So this is probably too big. 0.1 is probably too big. It's probably taking out some trades. But anyway, it's the same stuff. All right. Every bar is $1. So when it pulls back, you get a higher swing. It pulls back, it hits the ribbon, it bounces off. You anticipate it's going to get up to the prior swing high. So this one right here that just triggered right here at 44.12 should make it up here at 45.97, 46 bucks. Okay, that's what this one should do. Looks okay down here for that sort of thing. You'd expect it to exceed the prior swing high every time you take a trade. To continue the trend, it should exceed the prior swing high. So with NVIDIA, that's what that looks like. Okay. You can see so far today, these are the trades on 100 range. Now that's every bar being $1 here. If you want to break it down a little bit more, you're going to have more trades. Break it down so every bar is 50 cents. We've got to change the sensitivity, make it a little less sensitive in here. Make that 0.05. All right, make it a little less sensitive, even less sensitive than that, 0.01. That's better. Okay, so in here, if every bar is 50 cents, with it this way, every bar being 50 cents, it's looking like you have a trend change happening right here. And there's a chance you're going to have a shorting opportunity. Chance you're going to have a green arrow short right here. So, you know, it's up to you. On the bigger picture, it looks like it's going to go up to the high of the day, which I believe is right here. A little bit bigger picture, it looks like it's going to go up to the high of the day. But right here, it's actually weakening. The highs are getting lower. And if it failed right here, I would expect it to drop back down here to 443, right? 443. That's what it's looking like on this time frame. Now you see every bar in this is 50 cents. All right, this is a 50 range bar. So the max you would risk if you get into a trade on this, the max you would risk would be about 75 cents. Okay, when you get into a trade on this, with the other one, $1.50. With 100 tick, it'd be $1.50. You'd risk $1.50 per trade. So like this one right here, if you got in here at 44.16, it ran up to 44.89 so far. So you gained, you know, say 70 cents, 80 cents, 70 cents. I'd have my stop and break even on that. If I were looking at this on 100 range, expecting it to get up here to the high of the day, I'd have my stop and break even. Luca, I will check that out for you in just a minute. Okay. Let's look at the other one that you had. SOXL. Soxel. XL. This one. And what is that price at? It's only 25 bucks. So you're not going to look at that on $1. You get like one trade a week on that, right? Let's look at that on a 25 range. Okay, 25 range, that means every bar is a quarter. Right? Every bar is 25 cents. So you get a few of them today. All right. Starting today, this is the 5th. We actually didn't get any yet today. It's looking today like you don't really have much of a trend here. It's something you probably want to stay away from for right now and let it establish a trend. But you know, with this particular stock, because it's not terribly volatile, you're not going to get a lot of opportunity. If we were to drop that down to a dime per bar, you know, it depends what kind of scalping you're doing. But for a dime per bar, you got a nice opportunity right there. And with this, you're only going to risk 15 cents. Okay, so you'd be short here at 88.18, and it dropped down to 17.82. Pull back up, you'd be short here at 18.01. You'd stop out at 18.16 right here. Okay, and on this, if you're waiting for just the green arrows, then you would be taking this black arrow right here, right? But and that was it for today. So you would have nailed it on this first one right here, and you would have stopped out on that one. So what you would have anticipated out of this trade, 18.19, you'd have anticipated at least getting down here to 17.97. So at least a 20-cent trade out of that. Okay. Now you're talking about scalping, so I'm going scalping mode on you. Now this one is about the same price range. So you'd be looking at the same thing. You'd be looking at probably a dime. Right here, with a dime, you're only going to risk 15 cents, right? A bar and a half. So in this case, you'd have probably gone long here at 20.75, and you just stopped out right in here so far. And this would have been a valid trade. This would have been good. You're coming off a higher swing. Long-term direction is good. So it just would have been a stop out. Why does that keep happening? Anyway, when it comes back up, Now this was yesterday. Yesterday you had one opportunity there, and that was pretty much it. Right. So these lower price stocks, you know, if you have 1,000 shares of it, and you know, when you're trading a dime at a time or 20 cents at a time, make $100, $100 a pop. You know, you can certainly do that if you want to. So I guess I just keep disconnecting myself. All right. So one of these times it's going to balance out. There. Looks like it's balanced out right now. And yes, that was the SQQQQ, right? All right. And now Luca wants to talk about the NQ. Now you say the 100. That's what I was trading a few minutes ago. Okay, in a lower time frame. The NQ. That's what we took. Took a break even short back here a few minutes ago, and while I was just talking, gave a long trade right here that was good for 30 ticks. Because this is a 15 range time frame. Did you want to look at it on a minute or something like that? That kind of a time frame. Okay. Okay. When you say yes, please, you saying yes to what Dwayne typed in about talking about the QQQ? I'll give you a second to answer. Just say, yes, the QQQ. Well, I'll do them both. Okay. All right. So right here on this 15-main Q futures contract, if we get an up close right here, it's going to be a long trade, right? It'd be at 99.50 is what you'd be looking at. 99.50 is what you'd be looking to buy. That would give you, if it does give you an up close right here and it pulls out of the oversold, you're gonna have a green arrow long trade. If this closes down, you might not get a trade at all, and it could be working its way back down to the weekly trading zone right here. Right, it just closed down. You're not going to get a trade here at all. So let me cancel the one that I had waiting, and it looks like it's going to turn around and go down right now. That's what the NQ looks like. Now, a little bit bigger picture on the NQ. Let me bring this back up so I can still follow along with what you guys are typing in. A little bit bigger picture on the NQ. All right, let me show you this. What time is it? 1:21. Okay, yeah, we have time for this. A little bit bigger picture on the NQ. This is what it looks like, right? Now, when you are below the BBC ribbon, it's trying to get to the weekly trading zone down below. Now it's gotten to the weekly trading zone below, and the black step line just crossed above the MA1 right here, suggesting it's going to make a run up to the BBC. Well, the BBC is probably going to fail there, all right? Fail at the BBC, and then it should make a run down here. This is what I'm thinking it's going to do. This is the futures, okay? This is the futures. Now, if we look at the ETF, which is what I think you were trying to get at, then we'll look at this. All right, now futures are different. They're a lot different. Different exchanges, different everything. But it's okay. You can look at it in the same way. Now this is, again, this is on a 10 range. You're not going to trade this on a 10 range because it's $350. You'd probably trade this on a 50 range. So every bar is 50 cents. Okay. So in here right now, it just got into a little bit of chop. It gave you this opportunity right here. Now you'd have to move your stop to break even after you get like 25 ticks in the trade, or 25 cents. So the entry point would have been here at 85 and it dropped down to 60. So exactly 25 ticks. So that one would have worked out right there. If you took the black arrows in here, the first one would have been a break even, and the next one, if you took the next one, would have given you some decent profit. It's got a green arrow here right now. Now the long-term trend right here is not really bullish, right? It's kind of flat in there. What you really want to see it bearish like this or bullish like this. Okay, bullish like this, bullish like this. Not really bullish, it's kind of flat in here. All right, so I don't want to trade anything right here, right now. With this on a 50 range. Now, on a 50 range, we can look at it on a 100 range too, because it's $350 a pop. So you have no trade at all in here on the 50 range. I mean on a 100 range. All right. This is $1 per bar right now. And what it's looking like, if you got a down close right here, if you got a down close on this and it pulls out of the overbought, you'd have a green arrow right here. Right, you'd have a green arrow short trade, and I would anticipate that it's at least going to get here and probably to here. Now, this is the QQQ. All right, it's this right here. You see it over here, the symbol over here. All right, that's not the NASDAQ, the NQZ contract, futures contract that I just showed you. They do run. I don't want to say they run together all the time, but they run in similar directions typically if you're looking on a bigger picture. Okay, this is what the futures contract looks like. So it's kind of in a holding pattern right here, where the QQQ was saying basically the same thing. Yeah, the QQQ was saying we might have a short trade here. We definitely don't have a long trade. They're both saying we definitely don't have a long trade. And they're both saying we might have a short trade, right? Futures contract and the QQQ. You see that? So in here, if we had to down close and pull this out of the overbought, you'd have a green arrow short right here. And this, if it drops down, this half-hour candle right here, if it closes down below the MA1, below the black step line, I don't think it's going to, but if it did, you'd have a good opportunity to short it right down to the midpoint here and possibly down to the weekly trading zone down below. Ultimately, I think that's what it's going to do. You know, if you wanted, you did ask me at some point, you did ask me about that, right? What I thought. That's what I think. It depends how this bar closes. If this bar closes below the weekly trading zone, below all this stuff, or even the next bar, if it closes below the weekly trading zone or all this stuff, then we're going down for the rest of the day. If it doesn't, then we could muddle around in between here and here for the rest of the day. That's in between the ribbon right here, the BBC ribbon, and the weekly trading zone. I don't know. I mean, there's really not a lot of drive to move the markets one way or the other today. You know, that's what I was saying. This morning, it was kind of tough trading in the morning session. You know, we got our goal for the day, but it took a while. We had 3 stop outs in the beginning. I missed one beautiful trade that would have got me the goal for the day early on. And I had it just sitting there on my crude DOM. I had it just sitting there and it didn't hit me. I put it on like 1 second too late and it didn't hit me. But, you know, that happens. But that's what I think about the NQ and all those points. All right. So if we jump back in here, on the NQ, we had a long trade right here that's not working out right now. It looks like it would have stopped out. It would have taken it. The smaller time frame. There's one here that would have worked out just fine. One here that if I had taken it, I definitely would have stopped out. And I would not be taking this green arrow because that last one didn't work out pretty much to the tick. Right? If the entry point was here at 575, then it's a 5-point stop. So it got right down to 850 exactly to the tick. It would have stopped it out. That happened 3 times yesterday to me. It's a frustrating day. It's kind of like when I was late to my doctor's appointment, I was behind somebody who would not go through a yellow light. 4 yellow lights. They would not go through the yellow light. And because I'm in the South, they don't blow horns in the South. Unless you're crazy. I did have really crazily blow a horn at me one time. All right. So we wait. We really don't have any trades here right now. We need to get a higher swing over here, and I'd really rather have a green arrow because we had a direction change on the Russell. The crude oil had a couple of opportunities back here. It did get down to the swing low right here and finish that leg length for us, just barely. So the markets are really slow. We have big news coming out tomorrow morning. I suspect they may be slow because of the big news that we have coming out tomorrow morning. Let's be prepared for that at 8:30 tomorrow morning. Okay. The NQ is finishing this leg up. It needs to put in a higher swing. So that would have been frustrating if I had taken that, stopping out the take on that. All right. Do you guys want to see anything else? You guys that are in the live stream, do you want me to cover anything else for you? I'm happy to show you anything that you might want to see. All right. Well, it is 128.5 right now, almost 129. So I only have about a minute left in here. I don't think we'll get any other trades because we're not taking one here. We didn't put in a higher swing. Long-term trend is just flat here. We're in a no trade zone, so we're not getting anything there. On the Russell, we did put in a higher swing, but I want to see it give us a green arrow. And on the crude oil, we're just going sideways. Okay. So I don't think we're going to get a bunch of anything here. Right. And I have another meeting coming up here. Just remember. Jill should have gotten that link already. Right. Almost have a higher swing now. Should get out of the weekly trading zone. If this starts to move up, we should get out of the weekly trading zone. Now, what I was saying earlier about the ES, looking at the bigger picture, I was saying any long trade is really likely to be short-lived because ultimately, in the bigger picture, it's below the BBC and it's trying to work its way down to the midpoint down here, right? That's what I was saying this morning. It's trying to get down to this point right now. If things change and it closes above the ribbon anytime soon, then it may give us a direction change going into the afternoon. But the way things are looking right now, they're pretty weak right here. Not Russell, the end pulling back. They give us one more trade. What time is it? No, I ran out of time. All right. Well, I guess we're going to wrap up the live stream then. Let me just check this because Dwayne's going to ask in a few minutes. 36.15 and 1,000. Okay, 36.15 and 1,000. All right. So for you guys that are in the live stream, thanks for asking the questions. If you want to check us out in the morning, we run a live stream in the morning that starts at 9:15. You can check that out too. There was no trade here on the NQ. You can check that out too. You can also sign up for the free trial. If you've not taken the free trial and you want to, go here to mytradingiq.com, click on this right here to sign up for the free trial. All right? No credit card required. It is absolutely free. Just fill out this stuff. If you're on TradingView, make sure you give us a TradingView name right here, your TradingView ID. so we can set up the indicators for you. The only way to get access to the indicators is through the free trial, right? That's the only way to get access to the indicators. Even if you just want to look at the indicators and you don't want to sit in the room with us in the morning, the only way for you to look at the indicators is to take the free trial. Okay. All right, guys, that is it. With that, we're going to wrap up the live stream now. Let me get it up here. Thanks for coming today. Thanks for the questions. Okay, and that is done. And I can pass it back out to fabulous Phoenix, Arizona in Studio A overlooking South.
Alrighty. Recap
There.
of the of the morning session.
Today it took 36 minutes and 15 trades to get to $1,000 per contract.
Yeah, it was pretty messy this morning.
It sure was. Thank you.
All right, guys, one last look at the daily chart. We know where we're headed. This previous bullish cross and this measured move. It's amazing how they line up. It's going to take some time. We've been consolidating at the 50% fib for some time now. We got to take out the low of yesterday, and then we've got a shot at the 62. I expect a lot of turbulence there. Then the final move down to this previous bullish cross and the measured move should give us a very nice bounce. Now, it's been a long time since we pulled back to the BBC, and price always reverts to the mean. Look on the way up. Retracement, leg, retracement, leg, retracement, leg, retracement, leg. Price drops faster than it climbs. It takes financial commitment for price to rise. All it takes for price to fall is for the institutional traders to hit the pause button on the buy side, and down it goes. Again, to become a lifetime member, no recurring fees, no upsells, no nonsense, and to not only have access to everything we offer, everything we do, everything we've ever done, whatever we do in the future, go here, eminifuturestrading.com. Couple mouse clicks, you'll become a passport holder. Again, that's lifetime membership, and you'll be able to come to the members only workshop tonight at 8 p.m. Eastern. So we'll wrap it up with our good word for the day. We started yesterday talking about handling temptation. So here's part 2 of that. Nehemiah 8:10, the joy of the Lord is your strength. Ever notice when you're hungry, everything on the menu looks good? Well, similarly, when your soul is dissatisfied, sin looks tempting. That's why you must always be spiritually self-aware and monitor your level of soul satisfaction. On the dashboard of your car are lights that tell you how hot the engine is running or when you're about to run out of oil. They're sometimes referred to as idiot lights because only an idiot would ignore them. The main light on the dashboard of your heart is your soul satisfaction light. That's why in the Bible there are so many scriptures that call us to joy. Nehemiah 8:10, the joy of the Lord is your strength. Or Psalm 16:11, you will fill me with joy in your presence, with eternal pleasures at your right hand. Isaiah 12:3, with joy you will draw water from the wells of salvation. And John 16:24, ask and you will receive, and your joy will be complete. So why do otherwise intelligent people keep getting snared? Well, it's because when we're dissatisfied with our lives, we're vulnerable to temptation. And the deeper our level of discontent, the more susceptible we are. We were made for soul satisfaction. We can't live without it. And if we don't find it in our relationship with God, we will look for it in all the wrong places. Paul says, Romans 14:17, Kingdom of God is not a matter of eating and drinking, but of righteousness, peace, and joy in the Holy Spirit. Note those words, joy in the Holy Spirit. The secret to joy lies in spirit-directed living. It always has, and it always will. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Bell needs a tune-up.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.